Final hour session. It's about 3:30 p.m. on Wednesday, the 22nd. Want to discuss some key levels in the S&P right now. We haven't broken any major support despite the sell-off today. We were watching things closely. We had a nice day on daily profit play, nice little winner on pinch point. Actually, looking at pinch point more specifically, it was a winner on VRT. We hit our 50% take profit target, and we had earnings on VRT this week. Gapped up high, filled our credit, and then fell quite a bit today. So I consider that a nice, healthy win with that volatility expansion we get in our pinch point trades. And I'm happy to take that 50% profit. Also, did some shotgun trading in newsbreakers. We have some pending orders. We've placed, I think, over 10 trades, easily over 10 trades this week. Pending orders, they're all set up for at least 1-to-1 or better, high probabilities. And we've got some technical levels as well as some earnings catalyst data in the next 1 or 2 weeks. We have Tesla earnings today after market. We have Intel tomorrow. We have Mag 7 next week with Apple, Amazon, Meta, Microsoft. I'm sure Google is sprinkled in there somewhere, along with hundreds of other companies. But those are the big ones to see how steady and stable they're going to be. If you see on the screen here, earnings and U.S. inflation data during government shutdown. We finally have inflation data coming on Friday. It's going to be CPI. Headline CPI is forecasted to be at 3.1%, and the previous was 2.9. So looking like we're going to have a slightly higher print in inflation. However, I want to reference some Trueflation, get some third-party numbers to see what actually is happening out there in the land of inflation. We don't have data yet for labor. We don't have non-farm payroll. I'm not sure when that's going to happen. That might be waiting until the government shutdown is over and U.S. government resumes operations. But we have also services and manufacturing PMI this week. I think it's all on Friday, actually. So CPI and PMI this week for, the only real data we've had since the shutdown started was ADP numbers. And we know that it was pretty bad. And the Fed is cutting rates because of labor, not because of inflation. If we want to see growth, we have to have inflation. And it doesn't mean hyperinflation. It just means inflation. 2% target is going to be very difficult to achieve. And the Fed is cutting rates because of a softer labor market. The argument works both ways. I mean, usually when the Fed is cutting, it usually is marking kind of the end of a cycle. But we are going to see quantitative tightening ending, and quantitative easing is kind of underway if money continues to flow into the system. I do think the positive narrative of everything AI, you might call it a bubble, you might call it hype. I do think there's going to be some pretty aggressive rotations. We actually looked at a trade today in newsbreakers that the stock from April's low was up over 900%. And it was like a 2-line description of, I think it was data centers. It was something related to data centers. It was up like 900%, and it had just pulled back like 20 or 30% in the last week or so. I think there's going to be some aggressive rotations. We're seeing gold and silver selling off. My dollar cost averaging levels that I put in for Project Options Edge. We talked about this for the last couple of weeks. I put in dollar cost average levels on CEF and PHYS and GLD and SLV. So I might be getting hit for some of those pullback levels, which I am totally fine with. And I'm going to be longer term oriented on getting back into establish another core position on silver and gold. And then Bitcoin is also, dropped to below 110. So we'll take a look at all these charts today. Okay. All right. So where we're at right now, let's go to the live heat map. We have 64% of stocks declining today, 33% advancing. It was blood red earlier today. I posted this in Telegram. This is what we had earlier today. 70.4% of stocks down, and 27% of stocks advancing. So a lot of red across the board. The markets fought back a little bit. I am happy to say that my daily profit play indicator called a fantastic extreme today. So if anybody was following along, I also posted this morning during my daily profit play session. I said 66.60 to 66.55 potential bottom on the day, and our low was 56. It's not by accident. Okay. So the market responded nicely. VIX calculation, daily profit indicator did a great job. Obviously in hindsight, I wish I would have put in a bull put spread down here for a nice fill, but I didn't because we had a nice winner earlier this morning. Basically I got filled on we got filled for $1 credit on our iron condor that we did for daily profit play. And that quickly offered some profit. Before I was actually wrapping up my daily profit play session this morning, we had a 60% winner on that trade. So I was pretty happy with that. I also had a trade on my own. I put in a broken wing butterfly, which we did discuss this morning. We talked about butterfly spreads, broken wing butterflies, and iron butterflies. So if you wanted to check out this morning's daily profit plan session or recording, if you want to have a nice, 30 to 45-minute educational segment, butterfly spreads, broken wing butterflies, and iron butterflies, I discussed all that this morning. And I was filled on a broken wing it was a 6650 by 6645 by 6430. I got filled for $1 on that trade, and I closed it out for a 50-cent winner. Now, right now, that would be mostly a full dollar profit, but it was filled on this drop right here. When the market dropped aggressively and the VIX spiked up, I got filled on my dollar, and then price immediately went back up and chopped around, and that dollar credit dissolved very quickly to 50 cents profit. So I took the profit, I ran. It did come back down here. I was tempted to take another broken wing butterfly, but I thought, that's 2 for 2 on the day. No need to force it in case the market's going to hit, through the 100%. It didn't. Obviously, it bounced pretty hard right at my VIX box low, and we had these levels already kind of mapped out for the morning. So anybody that's watching right now, did we have some daily profit play success today? I'm hoping that we did. We kind of had to wait all morning. I'm not sure when we got filled. It was not immediately, but the trade that I took this morning for $1, we got out for 40 cents. That was a trade filled. We put the trade in this morning pending at like 9:35. The trade got filled at 10:46, was out at 11:06, which is kind of nice, right? 20 minutes in the trade for a 60% winner, which I'm happy with. And then a 12:30 fill for a 12:45 close, a 15-minute winner for another 50% profit. So pretty happy on that overall. And got filled on a couple of dollar cost average trades. Like I said, CEF, not quite there yet, but pending. And then PHYS is starting to get filled back up. So between some dollar cost average levels, CEF not filled yet, PHYS, I'm getting some partial fills. I'm doing my $1,000 and $2,000 allocation to those. So here is PHYS, and they were all filled at $30. So it's trading at 30.97. I got filled this morning at 30. And this is one of several. I'm looking at like 3-4 levels on gold and silver. Let me see if I have anything on GLD. GLD, I do. Actually, no, I don't have any. Do I have individuals? Nope, just ratio spreads, project options edge, stuff like that. This ratio naked put combo is looking good. I mean, this is all the way out to January, so only 86 days out. It's crazy that the end of the year is within 90 days. Or I guess, it's 90 to 100 days out to the end of the year. But that's up 84% of my max credit, so up $320. I have a naked put plus a hedge up 91%. That's a pretty good winner right there. If I was going to own GLD at 265, that's not too bad. But it should be a $300 winner. Ratio spread looking pretty good, up 86% credit. This one here up 86% credit, and then a bunch of ratio spreads in here. Let's see, I'm trying to think, 284 by 280 ratio spread. Let me look at this individually. Here's GLD. So GLD ratio spread. This account here, ratio spread. Some of these other accounts that are newer, put in some more creative trades to get them exposure. This is 2 ratio spreads. So I'll update this one, ratio spread. And this is also ratio spread. There we go. So looking for some profit opportunities there. And then going back to, so I didn't have any GLD dollar cost average levels filled. Okay, not yet. I'm looking to see if I can just fill. It was a $1,000, $2,000 dollar cost allocation. So it wasn't buying a ton of shares. It was literally like 3, 4, 5, 6 shares, just $1,000 to $2,000. I mean, GLD is pretty expensive. Did I have a dollar cost average on SLV? I still have some shares. I put on some collar trades. I didn't have additional shares filled. So naked put combo up 88%. Staggered collar trade up. This is crazy. 15-cent credit. The put side is up a decent amount. That's way off, but I think it's just because the volatility has expanded so aggressively that showing that I'm up a ton of profit on that collar trade. But what I'm looking for is the put side. Let me take a look at SLV. I'm considering taking profit on SLV if we hit like $34 on the spot price. I might not have to use it, but if we come back to like this, $36 level, $34 level, I'm going to close out my long put on the collar trade. So if anybody is, in SLV with me in Project Options Edge, or you're, looking at dollar cost average with me between Project Options Edge and A1 trading in my Pulver alerts. I've just got some dollar fills. Okay, so I still have more pending orders, and I wouldn't be offended if silver pulls back to the 50 or the 100 or even the 200 period moving average. I wouldn't mind it at all. I know it's going to be ugly. I know it's going to give up a lot of gains. Okay, but I think it'd also be an opportunity to buy, a ton and position for medium to long term and just play this. Now, we could also be dealing with more volatility here, and we don't necessarily go, ballistically higher, but we start to stall out and go sideways. Okay. So, like I said, I'm just trying to wait for buying positions. And if I get them, excellent. I'm happy to get the dips. Okay. GLD, we hit the 21 period moving average today. Gold has fallen from this recent high. Gold has fallen about 8.6%. And I'm happy with that. I want to see if it will fall more. So what's next on gold? I don't know. Maybe it's high, low. Maybe it gets right back up to the top, hits some tops, sideways, chop, a lot of volatility. But if we pull back deeper, totally fine. Okay. But after taking a 2 to 3 year bull position on gold and silver, it finally was a good time to take some profit. And so I am slowly getting back into these trades and allocating my percentages once again. But it's been a pretty good run. Okay, I want to talk some key levels now on the SPX. So I talked about this structure this morning during my daily profit plan session. We didn't quite break the highs. Okay, so even today's candle you can see is now indecision. We've had just a lot of noise for the last week or so. We had one big structure candle on Friday the 10th, and then everything else is choppy and trading inside of that candle. So we might test the highs, which means we'd have to take out today's level. We haven't hit the highs, which are 67.64. That's the all-time high. The low here is 65.50. I think 65.51. Low at 65.50. So that's why I put here on my screenshot for today, 6650, 6600, and 6550. Let's zoom out for a second. Here's where we are. Okay, here is the October 10th sell-off. We tested that low. This is 6550 right here. So 6550. It's pretty critical support right now. Okay, we also see a lot of chop around the 6600 zone. So here's 6600. 6600. And right now, 6650, today's low. So we're making a low, a higher low, and yet again, a higher low. I have to wonder, technically speaking, if that structure breaks, what does the market have in store for us, right? We haven't taken out the highs yet. We haven't taken out the lows yet. This market has spent time and time and time. It might go back up to hit the highs. So tomorrow is a brand new day of trading. Friday, we have a big news day with, I think it's PMI numbers coming out for the U.S. as well as CPI data in the morning. Do we stay inside this high? Is the market going to use Friday's move to possibly gap higher? I don't know, but we're about to find out, right? So looking at this structure, all inside the swing from the 10th, higher lows, and slightly higher highs. Is it possible that we're using today's bottom to work its way back up to a slightly higher high by Thursday, Friday? We'll find out. Okay. So I just want to keep an eye on this structure, because if this gives away, if we break, this support, if we break this trend line, then obviously it is, in the cards, we can come back and see 65.50. If we break this level, this is my measure move on my chart here. If we break 65.50, here is my measure move down to 63.50. It still comes back in to find some really strong dynamic support. What helps? What helps it to the downside? Possibly some lackluster earnings out of Tesla, some fear in AI, some massive rotation in the dollar index, or maybe a bid in bonds, right? But if the AI narrative stays intact, if earnings are solid, Tesla will be a big one today. Okay, U.S. stocks drops on trade risks. Okay, they drop and they're down for the day, but it's still, I don't know. I'm actually curious, by the end of the day, are we going to finish inside the market maker move? We saw what this morning, like a 30 to 35 market maker move. I can obviously reference what we saw. I think it was like a plus 35 on the day. We opened here And right now, price is down about 38 points. So if we come up another 3, 4, 5 points, the market makers, again, even despite the bigger sell off in the day, the market makers, again, keep prices contained and defended. And there's your guardrail. So we'll see how this level finishes out. But again, happy to have a nice winner today on Daily Prof Play. Get a nice winner on pinch point. Some trades ready to rip for newsbreakers, and we'll come back and tackle the markets again tomorrow. Okay, let's take a look at some currency strength. Here's the news that I talked about for Friday. We do have PMI numbers coming out of the Eurozone. We also have CPI and PMI coming out of the US on Friday. So 8:30 a.m. CPI drops, 9:45 a.m. PMI drops. What's interesting is both manufacturing and services PMI forecasted to be over 50. Okay, let's check the trends here. Let's go to the trends. No related stories. Why don't I have any charts? I don't have a graph on this. All right. Well, what I was looking for to see, I think I could pull it up on my A1 Edge Finder, but I'm looking to see if this is trending lower or higher. If we're above 50, that's a good sign. Below 50 is not a good sign. Okay. Let me take a look here on my Edge Finder. Just give me like 30 seconds to get logged into this. Sell puts on IBIT. I mean, I already have some running. I'll keep an eye on that. But yeah, IBIT is not bad. So we're dropping. We've got some pretty good support around $59. Just keep in mind, look, I don't know if the market's going to roll over, right? If we break 65.50 support in the S&P, most likely we're going to have a little phase of risk off. IBIT, Bitcoin could continue to fall. Use this low and this low. This is support. IBIT, if I really wanted to sell some puts, I'm selling puts around like, $50, $48, $46. That to me is the strongest level of support. You obviously can get a little bit friskier with this being the low and going out longer term. But if you want like immediate support, are you willing to take some ownership there? Because I think we could still pull back, right? But if we come back to test this level or come back to use this trend line, 52 to let's say 44, that to me is a strong level to be looking to scale in for some puts. There's creative ways to do it. There's ratio spreads, there's 1-1-1s, there's things like that, but it's not a super expensive instrument. So you're not going to get a ton of credit there. But I do have some IBIT trades running. So IBIT right now, I have quite a bit. I have some shares. I have a protective put that I'm still, watching through the end of the year. Here's a naked put combo that I did for Project Options Edge. Here's another naked put combo that's way, way out of the money. These are likely going to be full profit for, $469. Here's my naked put combo that I pulled $850 out of. And there's a little risk because 59 is potentially threatened by the end of the year. But I would still take some more shares. Okay. And then bull put spread 52 by 51, that's up 55%, and that's into January. So, if there's a rotation, here's the deal. If we see risk appetite to rally into the end of the year, and that's why I think right now that it is healthy to get a correction. Okay. This indecision at the top is okay. I think it's almost better if the market does this. If the market does this, okay, and we can round out these lows and get back to these highs and blow off that broadening top or that broadening pattern top, we're having a legitimate conversation with some technical measurements that are greater than 7,000 S&P target. Okay. My concern is that we keep doing this one little flash move, slow grind, and then it rolls over hard, and then it has a dead cat bounce and rolls over again. There's a lot of support down here, but as I said in Telegram today, it's like I don't want to see price below 61.50. There's a lot of, we've got a high here at 67.65. And if this thing drops to 6,200 or drops to 6,100, that's not a good look for this market at this time of year. That would be a 10+% correction. Let me see if we get back to this previous all-time high. If we dropped from the all-time highs down to that level, that's a 9% correction. Okay. I'm not saying that we can't. I'm saying that we shouldn't. If we want to maintain like risk appetite, animal spirits, get this market into Q4 for a rally. It's obviously October, so we want to see like a strong November, a strong December. If we can carry that momentum into January, that would be pretty ideal. Waterfall income, we've got a lot of trades stacked up, hoping for some nice profit by the end of the year. A little softer window is totally fine. A broadening pattern, like I said, is kind of great because a broadening pattern could still have some strong support around the 50 and the 100 period. the fact that we haven't hit the 50 period yet does make me concerned that we will end up finding it. And so if we go a little bit higher by the end of this week, I think we still come back down and find that 50 period moving average. Because I think right now we're at like 119 to 120 bars, which is almost the all-time extreme. So anyway, I would have been much happier had it hit, during the October 10th sell-off, even though it was all happening in a day, which is insane. But here we are, just chopped around and still inside the structure of that October 10th candle. Okay. So let's take a look. News again, currency strength. Look at today's movement. CAD is up. Pound had a lot of news sprinkled into the calendar this morning, and everything else is kind of jumbled here at the baseline. But CAD is up. Let's take a look at oil, gold, silver today. So oil, getting a fantastic bid. Great bid off the lows at 56 on U.S. oil. Let's go to USO. I'm long on USO with some ratio spreads. Let's take a look at that right here. USO 55 by 50. That's out quite a ways. I went out pretty long on that one. And then my oil futures right here. This is a trade I took for Project Options Edge. It is now up about 47% of max profit. I think 220 is my max profit as long as CL or oil future stays above $50. I also have a $500 profit trap in there too in case we come down to some fresh lows. But if this is going to turn for support, let's look at CL for oil futures. Okay. Just a really good technical bounce. $56. I put my level down to $50. I think that's pretty safe. More than likely, I will grab, $220 right here, which I'm happy with. Okay, DXY strong. Is that a question or is that a statement? It's strong-ish. Okay, and look, one thing I just want to throw this out there. One thing that might be incredibly disappointing for investors is everyone is super bearish on the dollar. Okay. Everyone is super bearish on the dollar, but I just want to throw this out there. Is it possible that the dollar is finding support in the long-term trend? I will draw this line again. I'll make it super thick. Let's make this blue. Okay. Watch this support line. Support here, support here, support here. Is it possible that the dollar just found support? I do think that there is a case for dollar weakness, especially if we're going to see better trade in the U.S. and if we're going to see a global economy do well, we want to see a weaker dollar. But if we're going to enter a period of risk off, I think the dollar can catch a much bigger bid to the upside, and this might be what was once a crowded trade with the dollar selling off 9 or 10% early in the year. I think this could be one of the surprising asymmetrical trades where the dollar just goes all the way back up here towards these highs. I'm not in that trade. I'm not that bullish on the dollar, that is for sure. But my gosh, I can't ignore that maybe technically, if we wanted to be long the dollar, you have to find risk. One way I can look at this is looking at UUP. Okay. So everything on the weekly chart is still in a sell zone, but it's hard to argue with maybe a trade in here that if we are bullish and we come back to this halfway point, if this doesn't stop, if we kind of round out this bottom here and we do not stop in this halfway point, I think the surprising move is this was an overcrowded sell trade, and this is now a short covering where people are going to have to unravel their shorts. I don't know yet, but I do think a surprise trade could be a stronger dollar, especially if we have a bigger dose of risk-off trading in the equities markets. Okay. So probably the biggest disruption, in my opinion, is going to be, late 2026. We might have some rocky, February to April volatility if the market finishes a high note for 2025. But coming into 2026, I think we have, some weakness through like February, April. That's a cautionary window for the markets, and also midterms in fall of 2026 could be a huge change to the overall sentiment. If we see the midterm swing way more left or way more to Democrats, and all of a sudden there's no more majority, then it does take a lot of power away from this current administration. And I don't know what that looks like, but I'm not necessarily trading out that far. I'm certainly more focused on, can the market remain stable through 2025? Can we, manage the volatility if we have some choppiness in 2026? Also, remember that sideways is a direction. We don't necessarily have to go gangbusters bullish. We don't necessarily have to drop and all of a sudden it's a bubble in a recession. It's like none of this stuff is happening. So you can see somebody that has like 20% chance of recession and somebody else that says 80% chance of recession, one of them is going to be right. I don't know which one. And so I'm not positioning for that. I am siding with what the market does best, which is it climbs a wall of worry. And if we have, aggressively bearish sentiment and we have worry and worry and worry, and then also everyone is so worried about the recession and they're so hedged for recession, we might not have it. And so I almost feel like the market has to go into like this crazy euphoric parabolic run to take away all the concern of anything bad. And that's when it starts to get really, really nasty after the fact. So sideways is a direction. And I just want to be watching this price action really closely. So far, the 21 and the 50-day period are offering pretty strong support. That's why this level, at 65.50 is so important to watch. If it breaks lower, 63.50 is a measured move. A little bit more volatile, maybe 6,200. But I like I said, I don't really want to see prices dropping past about 6,200 to about 6,150. Anything lower than that, we better have a sharp bottom, or we better have some aggressive buying opportunities. Okay. But is it going to happen in a straight line? Probably not. And I think that there's positive things on the horizon. Number one, U.S. government comes back online. Number two, maybe U.S. data doesn't look as bad as what we think it's going to be. Maybe. I know we're in a low high or low fire environment. Labor market's soft, but the Fed is cutting. Yields are cooperating a little bit. Not a ton, but a little bit. We are seeing 10-year yields dropping, which I think is good. I made a warning of this on Monday that if we see the Fed cut in October, which is supposed to be at the end of the month, and the Fed cuts again in December, okay, is the 10-year yield going to continue to trend lower? If it does, that's a good sign. What I don't want to see is us cut in October, cut in December, and by the time we roll into 2026, the 10-year yield is going back up by 30, 40, 50 basis points. That's not a good reaction. If it goes down by 40 or 50 basis points as we cut 50 basis points, that would be more in line with what we should see. I just don't know if that's the case. All right. So, look, this is a huge question mark for me. I'm still not putting in a ton of bond exposure. In fact, my TLT position I took profit on. I don't have any TLT in my portfolio. So I had a diagonal spread. I bought like the 65 call and the 89 sell call. And I was rolling that down a few times. Ended up making about $14 or $15 credit on this thing over, I don't know, 30 or 40 contracts. So, I took a nice chunk of profit. I think I was up about $20,000 on TLT for the year. It wasn't anything huge. I haven't been bullish. And I don't care. Like, I'm going to play gold and silver. I think that's a better long-term trade. I'm going to play the equities markets. I think that's a better long-term trade. I also can just trade a lot more aggressively on options than income. Okay. These are all things that I'm watching. Let's see here. Does tariff litigation start in early November? That can move markets? Possibly. Okay. And again, I mean, the litigation would be what? That they say that if you're passing tariffs as a tax, it's going to have to go through Congress. And so that would essentially force a revenue reduction, right? So that's one way, and that has to go through the Supreme Court. I don't know if they're going to do it. To my knowledge, Trump's done a pretty good job in the last basically 10 years, like stacking the Supreme Court to be more conservative. I almost feel like they would side with him and maybe not disrupt it. Okay. Maybe. Could it be disruptive? Sure. If they change the policy. But right now the majority is Republican. And I just think that the Supreme Court is also stacked pretty conservative. So could move the market. I think what matters more right now is data that we don't have. We don't have any data except for Friday is going to be a good glance into PMI, which globally is going up. So I think our PMI numbers continue to go up. This is good for assets. I think that having inflation data, it's probably going to be elevated, but oil prices also just came down. Let's take a look at Trueflation and see. I mean, shelter is a very, very sticky part of the inflation picture. And 2.27, I mean, we're not breaking highs here. Like, we're not getting aggressively higher on inflation. This is Trueflation. This is third party. This measures a bunch of things. This isn't excluding food and energy. This isn't excluding, shelter. So we've seen like a pretty steady pause. Now, again, I don't know if they're not getting all the data as well because of government shutdown stuff. I'm not really sure. But to my knowledge, it's, are we going to explode higher in inflation, or are we going to come back down and kind of tame? I mean, if inflation is relatively tamed, I don't think a 1/10 or 2/10 increase in inflation is really going to derail this bull market. Structurally, everything looks pretty bullish still. Okay. But to be determined. So we'll find out on Friday. I would expect there to be some gaps on Friday, gap up or gap down based on the market. If you want to follow this closely, then look at the futures market in the morning. Going into a smaller time frame, take a look at a 15-minute chart on futures, look at NQ, look at ES, and see what the market does at 8:30 in the morning. Right? If it's a big reaction one way or the other, I don't know if it's going to be tradable like at the moment, but structure wise, is higher inflation. What's the market's reaction, good or bad? Is it one big fat indecision candle? Is it one big boost to the upside? We've seen CPI data go both ways, right? We've had CPI that prints higher, the market goes higher. We've seen CPI go higher, the market goes lower. So it's the first big news event we've seen in the last couple of weeks since the shutdown. So I think the market's going to care. It's just a matter of, is it positive or negative? Okay. All right. So we'll keep an eye on that. That's coming Friday morning at 8:30 a.m. And then 9:45 is going to be our PMI numbers. All right. If dollar gains, gold, silver will drop more. Possibly. I mean, if dollar gains, yes, that's usually the correlation. If dollar goes up, then we should see a bit of a risk-off tone in the markets, right? If dollar goes up, maybe bonds catch a bid, gold, silver continue to decline a little bit. It's probably heavy profit taking, to be honest. It's probably heavy amounts of profit taking. Gold has been up 50+%, silver up 50+%, gold miners up, triple digits for the year. I think it's healthy to give some of it back. It was crazy to see what gold and silver were doing, running for two of the hottest assets of the year. So it's nice to see that the technicals actually matter and overbought conditions are starting to pull back a little bit. We could go sideways. We should have like a little pullback and maybe go sideways. We'll see if that tops out for a deeper correction. Or maybe it's just immediately buy the dip and off we are to the upside. I don't know. If I knew, I'd trade it. I'd be all in on what I know, but we don't know everything. And we certainly don't have guarantees or certainties. So I trade probabilities. I think right now I'm trying to buy dips on gold and silver. So that's a pretty healthy dip. We've come back to this first moving average. If there's more to go, I mean, we could do something very simple: high, low, lower, high, lower, low. That's it. If it's just a nice easy correction after this wave up, maybe it's a ABC correction. Is that it? Between the 50 and 100, buy the dip and off we go back to highs again. Is it parabolic once again? I don't know. Okay. I would almost rather see this, and this isn't going to be fun for anybody, but I'd rather see this type of rally in gold do this. I'd rather see price give it all back. And people are like, oh my gosh, I shoulda, coulda, woulda. Right. This is why I was taking profit, because this got so overstretched. It hit all my levels. We also have this crazy bar count. Okay. And I have been warning about this bar count all year. This wasn't a reason to be bearish. I wasn't bearish on gold, but I was cautiously watching some profit, because when it got stretched this far away, I mean, this move was pretty wild. This was a 23, almost 24% move extended away from the 200 moving average. And it's also all the way back here to October of 2023. That's insane. That is the last time that we touched the 200-day moving average, 520 bars. So the last time it was that extended was 2009 to 2011. It was over 600 bars, and it just crashed straight down to the 200. Okay. So my warning is this: this 200 period moving average is going to get hit eventually. Now, is it a quick rally back up again? Does it form a top, broaden out? Does it go a little bit higher? Look, the higher this thing goes, the more it gets overstretched, the nastier the correction is going to be. So if we are putting in a bit of a short-term top, this should be good to let these moving averages catch up. Okay. And if it consolidates here, totally fine. If it comes down and dips, totally fine. We can still technically find some good levels to buy, and medium to long term, I don't think there's anybody that's arguing right now, based on what gold has shown us this year, that we could be talking about gold at $10,000 an ounce, that we could be talking about silver at $100 to $200 an ounce. It's very possible. They are now being treated very, very differently. Okay. I think it's banks and put them on the balance sheet as tier one currency or tier one money. And also silver is no longer an industrial, but also a strategic metal. So that just kind of puts a very strong bid into both gold and silver. But with this recent correction, I mean, it's risk appetite. So if we have pullbacks, they're going to be volatile. This is why you protect profits. This is why you pay attention to technicals. Okay. All right. I'm going to check one thing today for the open to close. Here's my daily profit indicator. Based on the open today, did we have the markets? Oh my gosh. Look at that. Somebody read me that number. 34.89. Our plus minus on the day was like 34 to 35. Market makers nailed it. Again, they let prices slide, but they still defended the move on the day. So this is why daily profit play works so well. Even with the crazy volatility, it works. So good win on the day. Okay. All right. What else? I think we're good. Friday news coming out for the first time in a while. It's been weeks. We've had no data for weeks. So I think the market will care. Pay attention to futures. Watch in the morning, 8:30 a.m. Eastern time. You'll have CPI futures, or I'm sorry, you'll have CPI data, 9:45 PMI data. Watch ES and watch NQ. See if the markets actually care with some type of aggressive price action move. And then we'll see where the markets take us for the remainder of the day. I'm watching this potential broadening pattern. Key levels, in my opinion, if we get back down to 65.50, if it breaks that floor, we're probably going down to 63.50. Get it out of the way. What makes me more nervous is going to higher highs and continuing to go higher. That makes me actually more nervous for something that we either limp in at the end of the year, which I don't really want to see, or we end up getting a bigger blow off move. And all of a sudden, 2026 is incredibly volatile. So to me, the easier trade is let's get some sideways noise here. Let the market find its own little bottom. We can trough this thing out, and then we can work our way back up, measure breakout move, and then have a projected target once we break the broadening pattern tops. That to me is an easier way to forecast and also maintain a bullish posture in the current market. So look, I'm not saying that higher highs aren't a good thing. Okay. But I'm nervous that still not hitting this 50-day, going higher, going higher, going higher. It's like the melt up, the upside risk continues, and eventually that is going to come back to bite us. And I certainly don't want to be left like buying at highs, so I'll be way more cautious going into 2026 for some type of correction, certainly more nervous going into midterms, late 2026. So it might be just a lot of income trading in 2026, which is fine. Figure out how to survive. Okay. I'll let you go for today. If you're watching, appreciate y'all being here as usual, live or watching the session afterwards and recording. YouTube.com/Chris Pulver. Click that thumbs up button, subscribe to the channel. If you'd like to join me for my daily profit plan room every single day, I'm live at 9 a.m. Eastern time. You can join that link right here. I do have an opt-in. Give me 1 second. I'll share that. So here is, share this link. Daily profit play, weekdays, 9 a.m. Eastern time, daily profit plan live sessions. There's a link for that. If you'd like to join my Telegram. Okay. So there's my Telegram. I do have a Discord. Yeah. I mean, I'm live every single day. So let's come and grind it out tomorrow. Let's figure it out. Okay, good stuff, everybody. Kindly hit the thumbs up button, like, subscribe. That helps the channel, supports the algorithm, and gets my channel out there. When you click on YouTube and you can see those thumbnails on the right-hand side, it'll pop up there for other people to watch for the market commentary and some live sessions. And tomorrow we will tackle another daily profit play. We'll see what happens. Pretty volatile day today. Another kind of blackout window. I do think it's going to be interesting overnight. Let's see what Tesla does. Okay, Tesla has earnings right now. Nothing yet. So I'll get the update. We'll see if there's a big post-market move. We'll come back and address this all tomorrow. Okay. I do have Tesla set up in newsbreakers. We took a little trade right here to see if we have a strong push in earnings. If we do, we're probably going to see a higher high tomorrow in the stock market. If we have a big miss in Tesla, I'm looking to do a bull call spread down here on this initial breakout point and then take this into November and December for a rally. So either a immediate rally and positive earnings, we'll see what happens, or a more kind of cost-effective, let's get a better fill at a much better technical price and see if this bull market will be maintained. Okay. All right, good stuff. All right, everybody. I'll see you tomorrow. Tomorrow morning, 9 a.m. Eastern time. I will be live on Daily Profit Plan. I think tomorrow morning at 8:30 a.m. I'll be live with A1 Trading as well. I'll be jumping on with Nick in the morning. So you can check that out on my YouTube channel, youtube.com/Chris Pulver. All right.